trading ranges, what it is, how can I benefit from trading ranges, and what you should do to get better in having an idea what it actually is. So I don't want to yap too much. So usually when you start an analysis on any, I don't know, any stock, any, let's say this could also be, I don't know, crypto, Tradify, whatever. Usually you want to start on a higher time frame. So let's say, for example, on the monthly. And so how do I know where I want to buy some stuff long term? And what we first gonna use is the Fibonacci. And wait, let me edit this here real quick so we can look at this together. And we're gonna use the background and we're gonna make it so the 0 point, we're gonna make it green, and this one we're also gonna make it green, and this one we're gonna make it red. Okay, perfect. So if you don't know what a premium or a discount is basically of a range of a swing, either a zone where in a premium you want to sell and in a discount you want to buy, usually. So this is how it works. We can also flip it. Doesn't matter how you pull a fib. Both ways it's correct. So if I look now at the monthly, so where is the low on the monthly? Very easy, it's right here. This is the low. And where's the high? If we look at this, this is the high. So where would I like to buy long term? If this is like a long term play and I want to buy spot, I don't want to trade, but I want to buy spot, I want to swing it, whatever. What I would do is first get an idea of actually, oh no, we can also flip it so it's easier to understand. Wait. So now it maybe makes more sense because we got the green zone and the red zone. Do I want to buy here? Probably, I don't know, depending on the reaction. Maybe like short term because we maybe got something here, some last liquidity left. I don't know, maybe under these lows there's something left, but I don't know. I really don't know. So how can we get now more specific? So first we start to look, for example, I mean, on stocks, usually breakup blocks kind of work. And if we look on a 2-month chart, we actually already found something very interesting. And this is like a breakup, like this is an order block, or it's like a, what it's called, like a demand base. So if we scale now lower, so what we need to see is basically that it's, oh, also this one is already used on the 4. So let me scale a little bit lower. Okay, so we see on the 3 weeks, 2 weeks, doesn't matter too much. So all we need is here a proper demand base, and also we got here an order block. So I personally believe that just because of that, this could actually work, because it's a double hidden. So this is one FEG, second FEG, it's like a double hidden breaker. So now if we put our fib over here, wait, can we change this now to this so I get an idea of where the price actually sits? So usually what I look at is, for example, the first one of the first highs, and this could be one of the first highs, or we can also take from this high to this low, this swing, and see it's aligning with the GP. So probably if I would have to buy this stock here, I would probably look at 200. I would probably long term buy it somewhere around here. So why do I put my fib from here to here? Because it's the previous swing high and the recent low, it doesn't really matter. There are like so many ways on how you can pull a fib. You can put it from here to here. You can also use like internal ranges. For example, if we scale now lower on the daily, what's happening here? So we've been kind of like accumulating, going a little bit lower, and it's always a little bit flaky, you know. You could use, for example, so you see this high and this high gets respected, we make a lower, so technically this is like a break of structure, even though it's not the nicest one, a change of character, because you know, now we're switching to bearish, but it's very internally, you know, it's like over 1 or 2 weeks this is what happened. So what you could do is put a fib here. Usually see it's GP. This is kind of like an old what it's called, like a demand supply base, and this is like an auto block as well. So what you could have done is, if you want to play very safely, you put your stop here, maybe something like this, depending on your risk tolerance, and then you aiming for, let's say, some hot lows, for example, or another huge imbalance. And now this is, for example, like an intraday, or like not an intraday, but let's say on a lower time frame swing. Still, it's the daily time frame. But what you could do is you could put the fib from this low, because you were trading from this range here, this is your trading range, you're inside, to this current high. And if we put a fib here, you could, for example, target the 05 like I did already, and or you can also sometimes front run the 05, you know, just in case it reverse. So you would have made money on this technically. And usually it's also a nice way to find maybe potential intraday retraces. So it goes both ways. Usually it will always give a low reaction, and depending on your trading style, you could take something like this, for example, from the GP. If you want to play very conservative, I don't know, you could do something like this. Is this a good RR? I will probably not play this, but you get where I'm coming from. Will fibs help you to be a better trader? No. Will they help you to understand premium and discount? Maybe. So all you need to know is, wait, can we remove this? Wait, how does this work? Let me make it a little bit smaller. Then we put it here. Okay. So usually, this is why I'm talking also about premium and discount, because it gives you an idea where to actually buy. With this color scheme, you see very easily, okay, I want to buy here, and I probably want to sell here, at least for this range. And if I'm doing it like this, see, this is probably your target. So if you look at this like this, from this entire range, you bought probably somewhere around here, because it was the 05 of this first range. And this is something I want you to pay attention to on a intra, like on a internal swing. Or maybe let's move over to NASDAQ. I can explain it better there. And it doesn't matter if it's NASDAQ, if it's oh no, let's not do NASDAQ, let's do NQ, because it might be, my chart might be a little bit cleaner. So remove drawings. So see, of course you got here the daily, blah 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 blah, all that bullshit. But if we move now to the, let's say to the 1 minute, might be a little bit easier to understand. Okay, there's a lot of chop. Yeah, whatever. Let's take this. So we identify, so let's say this is our current low. And it creates the first, I mean, maybe this could be already the first high, or this one could be the first high. So we got kind of like a new range here. What we're gonna do is we're gonna do again the 05. Where is it? Then we do this. So you're just getting a better idea. And we do background, sorry. So, oh, we flip it the other way around, doesn't matter, just that you understand, okay. This is the first range, so this is, there will always be like a new dominant low, and let's say this is a new dominant low. What the price usually will do is it will always come back to these first ranges and fill them and take it as a as fuel, because usually there will be liquidity left. So if you look at this, it worked out here pretty well. The price came back to here and moved on from there. And this can also, depending on your overall trend, work the other way around, but you need like a proper range. So see, there is like not really anything we would like to trade. It's like, why do I don't like to trade this? Because it's like a lot of chop. But see, here's like a clean move, up, down, and boom, took it. Now now we want to look, okay, here we're finally creating, apparently now we, of course it's now capped in hindsight, but we're creating here, this is also not so nice to trade, but we can still give it a shot. Yeah, this range is not so nice. So maybe let's go a little bit further. Okay, let's say this retrace for some reason. I also don't like this because it's kind of also like a head and shoulders here, and then it took this for lower. It's very choppy here, very choppy price action. Or maybe we can find something here. Okay, no, okay, perfect. These lows are kind of like stacked below each other, so either way, what it could be something like this, maybe. So, or if you really want to take more like a swing, then you wait that the price just trades back into this. Did it touch the 555? No. So this would be wrong for some reason. Okay, so ideally I would like to see more something like this to get here, but it didn't work out. We kind of took this first range, also it's the 1 minute, traded back into over the 05, and from here, yeah, whatever, target these lows, for example, or we went even way lower. But maybe you now understand the way of how lower time frame or like the first range is building. Maybe this range would also be valid, but maybe later on we would have got stopped. So because it took like this first range here, so we can also move to the left. If we take a look here, yeah, didn't work out. But okay, perfect, we got another one. Okay. Oh, perfect example. See, kind of like these highs here. When I see this, then I know, okay, this is manipulation. And we're starting closing back below these highs here. This could give me the first idea, okay, we might actually want to go lower. See, first range here, kind of like a mini break of structure. Whatever, I don't use break of structure, I'm not so interested in break of structure, but see, traded back above the 05, and from there kept in high inside. But it's the first range, that's what I'm saying. And how do you identify the first range? Of course, you need stuff like a break of structure, because if you're still in the uptrend and if you don't know how to spot an uptrend, maybe you could use as a helping tool trend lines and so whatsoever. So first, ranges are very important, and overall ranges are also very important. Don't think that you're of course, for continuation this could work, I don't know, but usually it's not the best idea just to, in the middle of nowhere, when you already had the high, that you starting to take continuation trades in the middle of a range, because you want to see first a low getting built or a high, and then you're going to take the retrace. We can also take a look what it did here, maybe from this, or did it even work here? Yeah, it did work here. So even from this entire range, after we already had the crazy confirmed thing, 05 retrace, and then boom, send it lower. We can also take a look if it ever perfect touch here. So yeah, this is how you identify premium discount, and maybe you want like auto confirmation for this. This is what I'm saying. So you understand, okay, price usually just comes back and then gives a move. I hope this was kind of helpful. I wish you all a blessed day, and if you want to see more technical analysis, even though I haven't done it in a while, just let me know if you want to talk about certain stuff. So now you should know where to buy, for example, stocks long term. All you need to do is go on the chart yourself and figure it out. You need to practice on the real chart, otherwise it doesn't make sense. So all you need to do is figure out where's the first range. Maybe you do something like this, or maybe you do the entire swing. There are many ways which could give a reaction, and the most important thing is nothing is guaranteed. There's no guarantee, and it's a probability game, so there's always a chance of losing. Losers don't make you stupid, but bad execution makes you stupid, because you are not sticking to what you've learned. And it's a difference, because losers are part of the game and winners are never not guaranteed. There's nobody with 100% win rate. It's impossible.